Good morning, good afternoon, good evening, wherever you're watching me today. My name is Peter. Welcome back to another episode of Invest with Peter. So thank you for your support. Thank you for your subscription and all that. So today I'm going to be talking about the effect of Jackson's Hole in the market. So on this Friday this week, there's going to be this economic forum that happens in Jackson's Hole. Jackson's Hole is in Wyoming, United States. If you don't know anything about Jackson's Hole, you can just Google it and just explain what's going to happen and what might come out from there this week and how it's going to affect our investment down the line. So now,
to the markets this week. Certainly there's a lot when you take a look ahead to Jackson Hole. You've got earnings report, also the DNC kicking off. What's top of mind for you and why?
Look, I think this week is going to be highlighted by traders really kind of evaluating what's in store for us in Jackson Hole, because I think that's the key to kind of the next phase of the market. Are we going to be in a market where the Fed is not so much of a headwind to asset prices, or is the Fed going to start to ease gradually and start to bring monetary policy back down from a restrictive level? There's not a whole lot of data points between now and then, but one data point that I would highlight that I think hasn't really gotten enough attention is just the Conference Board Leading Economic Index. Right now, we're in the midst of the fourth deepest drawdown in this series, all the way going back to the 1950s. And the other times we've seen drawdowns in the leading economic index to this level have been, 1973, 1981, and 2008. We're 14.7% off the all-time highs that were set at the end of 2021 for this index. And so, to me, it's just a deterioration factor that keeps going against us here as we look at kind of where the economy is headed. And so, it's important for us to kind of look to Jackson Hole to see that the Fed can start to remove the restrictive policy. We're going to find out, see what happens this upcoming Friday. But to me, I'm paying laser-like focus on kind of where LEIs are headed from here.
Is it on inflation at Jackson Hole?
I think that they're going to be awfully careful about declaring victory. I think that the most likely outcome for the meeting this upcoming Friday is a 25 basis point cut, absent some other kind of downside surprise to inflation or employment between now and then. What really kind of looks at my thinking here is just simply, I don't think the Fed wants to repeat the mistake that they made in the fourth quarter of 2023.
In Jackson's Hole this week on Friday, we expect Jerome Powell to talk to us about the expectation, what he's looking at, because it seems what we're looking at is different from what the Feds are looking at this point. So I think market is actually eagerly expecting Jerome Powell to start saying, by what basis point are you going to be cutting from and all that. And two, I was surprised Jay Powell might not even mention how many percentage is going to be cut, because market is expecting the Fed to start cutting by September this year, because it's long overdue. Let's be sincere to ourselves. UK has started cutting rates. ECB started cutting rates. It's only the biggest economy in the world that we're still waiting on as an investor. So now what am I talking about today? So what's the next level? All right, that's going to happen if Jerome Powell decide not to talk about rate cut. Market is going to panic, and that's why I'm actually doing this video now to tell you that, well, the terms and the language market is expecting to hear from Jackson's Hole, if those terms and those things are not highlighted, market might actually panic, and it might result to a downtrend in the market on Friday. But we don't need to panic, because we know, and the consensus actually said, the Fed will be cutting rates by September. Some people were saying 25 basis points. Some people were saying 50 basis points. But to my own view, I think market is going to be all over the place until we actually know what's going to happen. But I believe we're going to be having 25 basis points, because if Jay Powell and its colleagues actually decide to cut by 50 basis points, that tells us that they've come late again. Market is going to look as if, okay, these people, they've realized that they are late. They want to catch up with the momentum of the economy. That's why they're cutting by that much. But to me, I think Fed don't have to do that. They just need to cut 3 times this year. September, November meeting and December meeting. Then next one is January. They can cut by 25 basis points each. But by November meeting, they may decide to go 50. But on this point, this level, I mean, 25 basis points is not that bad because, it's been much anticipated, like, where is Fed going to go? Where is Jerome Powell going to go? So I think we'll have 25 basis points and all that. So now this, the CPI for July came out and market was, quite happy with the number that came out. It was 2.9% for July CPI. So, and the economist came out and say, we've said it that the Feds are late to the party again. They need to start cutting rate now. If not, this can lead to another thing that we don't want as, in the market down the line, that they need to come in now. And some even are even suggesting an emergency rate cut. I do not go by that because emergency rate cut will make market panic and market don't really like, uncertainty. So if they come out and say, because CPI came out 2.9%, that means we're probably late now. We need to start cutting rate, make emergency rate cut to 5 basis point. So many people jump up, but I think market's going to go down because that says so many things that Feds don't have a clue what they're doing. Feds know that they've realized that they came late to the party. And that's why they're actually making an emergency. So I do not go by emergency rate cut at all. Though so many companies were waiting for that. Thank God it didn't happen. That is not good for the market, right? And also, so the significance of rate cut, right? Once Fed start cutting rate, it's always, like a pattern. When the first week or the first day that the Fed come out and say we're going to cut rate by 25 or 50 or whatever basis point, market always go down a little bit just to see how people are going to react, how the investors are going to react. But I think the effect of this rate cut is going to be positive on this line because it's much awaited rate cut. Because, all around the world, they're looking at what's US looking at, what are they still waiting for? What are they going to do next? Why are they still waiting? That. So it's much anticipated. And I believe by the time they start cutting by September, we will see a massive run in the market. And that's why I'm actually going to be advising you that if you've been buying bonds, if you are into index and all that stuff, you may start thinking of deploying those money into equities and cryptocurrency, because from that end we're going to be going into a rally. I'm not saying massive rally, but we might have a turnaround in the market. And we have companies like Nvidia who is going to be reporting end of this month. So those things, if they report positive earnings, that means it's going to shoot the market towards a positive direction. So I think the momentum now is within what's going to happen in Jackson's Hole on Friday, and I believe we need to be looking vividly, and these are the times we need to be looking out for. Fed Jerome Powell now needs to be talking about, you need to soft his pedal. You need to be dovish in the words he's going to be using on Friday. You need to start saying, well, though we're looking at the data is positive, so we will be considering, reducing rates at some point down the line very soon. It may not mention September, but these are the words market need to hear, that they need to soften their voice. They need to be dovish. Fed Jerome Powell need to be saying, we have considered all data coming in at this point. It's not going to be a bad thing to start reducing rates and all that stuff. And that will signify that they are actually considering September, even though 75%, consensus push towards rate being cut by September. Some are saying 50 basis points, some are saying 25 basis points. I still believe 25 basis points is the number that is much, expected from the Fed at this point. So to cut my long story short, I think from Jackson's Hole to Nvidia earning report, we will be going towards a positive September. Even though September has been known for a downtrend for equities, but this might actually change momentum at this point. If Fed cut rate, CPI for September, for August comes out in September and it's positive, I don't see any obstacle in our way to start deploying those money, apart from political issue and some other issue that I'm going to analyze in my next video. These are the problems that we might have in the market. I'm not going to talk about that in this video, but in the next video, I'm going to mention what is going to be the problem that we might be facing down the line in our, investing journey. So thank you very much for watching this video. Please subscribe if you have not. I'll see you some other time, and bye.